The new currency war. The rising price of gold is just the beginning. Have you ever considered how we could afford a $1 million house in Vietnam with just 900? It's possible simply by working hard for a few years. Recently, American capitalists have demonstrated a clever strategy. Convert Vietnam dong to US dollars. Wait 2 to 3 years. Then exchange it back to Vietnam dong. Due to rising US interest rates, people prefer converting their money into dollars and depositing it in American banks to earn interest. This trend has prompted many to sell Vietnam dong for dollars, causing the dong and most global currencies to devalue significantly. This is a currency war, fought without gunfire. I don't need to threaten you with a weapon. Your entire property could still be forced to sell to me at a steep discount. If you think the Federal Reserve Fed halting rate hikes or even lowering interest rate signals the end of this currency war, and thus your chance to buy a house at a bargain, think again. A new round of currency wars has quietly begun. When capitalists worldwide start hoarding gold and you still ignore its value, it's no exaggeration to say you might remain forever poor or at least never become rich. What does this mean? Hello, from FortuneCraft. Ladies and gentlemen, to grow your wealth or protect your assets, you must pay attention to the Fed's movements. As professional investors, we've been closely monitoring the Canadian Central Bank. Take a look at this chart. It's straightforward. The blue line represents the assets of the Canadian Central Bank, while the gray line tracks the Fed's during the 2008 financial crisis. Canada's green line rose earlier and faster than the Fed's gray line, meaning Canada expanded its balance sheet and injected money into its economy before the US did. The same occurred in 2020, when Canada began pumping unlimited money into its system. The Fed followed. Last year, when the Fed started adjusting its policies, Canada was already 2 months ahead. What can we conclude? Whether expanding its balance sheet or tweaking policies, Canada typically acts before the United States. This makes sense. In a war, does the leader charge in first? In movies, perhaps, but not in reality. If the leader jumps in and fails, it's game over. Instead, they let subordinates test the waters to gauge the situation before deciding their move. If the US were the first to cut interest rates and misjudged the timing, markets would panic instantly. That's why Canada serves as a sort of subsidiary to the US, pioneering actions to test market reactions. Now, Canada has announced it will expand its balance sheet and inject money into the market next month. They're gearing up to act. Does this mean the Fed will soon follow? Every time balance sheets expand or inflation rises, gold prices soar. For instance, gold prices doubled due to inflation, and by 2020 they nearly doubled again. So, if we invest in gold before inflation spikes, our assets could double when it happens. But how do we invest wisely? The surge in gold prices signals a new phase of this smokeless currency war. People's assets not only fail to grow after inflation subsides, they depreciate faster. Why? If you don't want to be a pawn in this war and instead seize the opportunity to build wealth and elevate your economic status, follow my channel. I'll keep sharing valuable insights. Worried about forgetting this information? Click like to save this video to your playlist for easy access anytime. If you don't actively seek news, you might not know that a month ago, I mentioned 7 U.S. states had passed laws recognizing gold as legal currency again. That number has now surged to 47 states. In other words, for Americans, gold is now on par with the dollar as a medium for purchasing goods without necessarily using dollars. What does this imply? If the Fed expands its balance sheet and pumps more money into circulation, the dollar will devalue instantly. However, if the U.S. government encourages people to convert dollars to gold beforehand, their assets won't suffer as much when the dollar weakens. This is the surface-level goal. Here's what's crucial. Both dollars and gold are now regarded as currencies. So why has gold's price been climbing recently? Is preparing to raise import duties on gold. Imagine I'm a gold bullion seller. Currently, I pay $100,000 in import duties to sell gold in the U.S. But if that tax jumps to $300,000 next month, my costs will rise. To maintain profitability, I'll need to sell gold at a higher price. Knowing the tax hike is coming, wouldn't I import as much gold as possible now, paying only the current $100,000 rate instead of $300,000 later? That's exactly what's happening. Everyone is buying gold in the UK and shipping it to the US like crazy. Gold bars and bullion in the UK are nearly sold out, driving prices up dramatically. This marks the start of a new currency war. What does this mean? When gold prices rise, it benefits the U.S., which holds the world's largest gold reserves. Historically, the U.S. has amassed gold by selling weapons and collecting payments in gold. During the gold standard era, they told the world, "Give me your gold, and I'll give you dollars. You can trade with dollars, and if you want your gold back, just bring dollars to exchange." But later, the U.S. noted that few people redeemed gold, preferring dollar-based trade. Claiming the gold standard was inconvenient, they abolished it, ending the ability to swap dollars for gold at the Fed. Thus, the U.S. collected gold globally using its paper currency. Today, the U.S. holds over 8,000 tons of gold, more than any other nation, exceeding the combined reserves of the next three top countries. Beyond its own stash, many nations store their gold in Fort Knox. For example, Germany keeps half its gold there but can't withdraw it. When Germany asked to inspect its gold in the U.S., the request was denied. In total, the U.S. controls up to 15,000 tons of gold, all considered assets. So, when gold prices rise, who benefits most? On the Fed's balance sheet, gold reserves recorded 40 years ago were valued at $111 billion. With today's higher prices, those 8,000 tons are worth at least $800, not counting foreign gold stored in the U.S., yet the Fed still lists them at $100 billion, undervaluing them by a factor of 70. The world follows the Fed's investment cues. When the Fed pumps money into U.S. Treasury bonds, their prices rise, prompting global investors to buy them too. This requires dollars, boosting demand, and reinforcing the perception that dollars are the safest asset. But there's a problem. U.S. bonds are becoming harder to sell. People doubt America's ability to repay its debts and are less willing to lend. Now gold, an undervalued asset, could become a secret weapon. Imagine, I want to borrow $10,000 from you, but you doubt I can repay it. If you discover I own $1 million antique in my house, you might reconsider. Similarly, whenever the U.S. expands its balance sheet and floods the economy with money, the world sees it as reckless. The U.S. now owes $36 trillion, though 80% of that debt is from printing money and borrowing from itself. The actual debt owed to the world is about $7 trillion. Here's the striking part. 47 of 50 U.S. states now recognize both dollars and gold as legal tender, hinting that the U.S. might be preparing to back its currency with gold again. The U.S. has also announced plans to tax gold imports, triggering a rush to ship gold into the country at current rates. Not only is the U.S. amassing more gold, but many forget it already holds the world's largest reserves, with gold prices skyrocketing. Can you see the bigger picture? If the U.S. reinstated the gold standard, using gold as collateral for dollars, what would happen? People lend to the U.S. through bonds because they trust its stability. But as confidence wanes, with countries accelerating de-dollarization and shunning U.S. bonds, what's next? If the U.S. buys gold to dollars and bonds, the world might lose faith in the dollar, but not in gold. The U.S., that already the top gold holder, is stockpiling even more. It could then argue, use dollars and buy our bonds. Worst case, we've got gold to back it up. As gold prices surge, while the U.S. holds the most, it could use gold as collateral to borrow more, or even reinstate a gold-backed dollar system. Through fractional reserve banking, printing $1 trillion could multiply into 10 trillion, each dollar theoretically backed by gold, restoring trust in its value. The U.S. is crafting a narrative. Because I hold gold, dollars and bonds retain value. They won't become worthless paper. It's a brilliant move, turning risk into opportunity, luring the world into its web. While nations rush to buy gold instead of U.S. bonds, both assets remain in U.S. hands. Same outcome, different path. Last year, as we began buying gold, it entered a bull market, driven by U.S. free actions, while bonds slipped into a bear market. Countries like China, trading heavily with the U.S., have shifted from reinvesting surpluses in U.S. free bonds to accumulating gold. After earning dollars from U.S. free trade, they often held them without immediate use. But with the Fed printing money, dollars lose value. Historically, China and others bought U.S. free bonds for interest and liquidity. Now, after Russia's overseas assets were frozen, China fears the same fate. Instead of reinvesting matured bonds, China recovers its principal and buys gold, shipping it home to secure vaults beyond foreign reach. The U.S. raised interest rates, crashing bond prices and bankrupting U.S. banks leveraged in bonds. China, Japan, and the U.K. also slashed U.S. bond holdings last year. Pivoting to gold, four groups buy gold: industrial firms for production, consumers for jewelry, central banks, and investors. The first two barely move prices. Central banks and investors drive the market. When central banks dump U.S. bonds for gold, bond prices tank and gold soars. A trend just starting. If gold becomes currency, and the U.S. keeps pushing its price up, a new currency war could ignite. Even without rate hikes or global lending, cash flows to the U.S. As gold prices spike, people buy bullion, effectively trading local currencies for gold. Gold ETFs and futures, traded in dollars, accelerate this shift. Global currencies are sold off, devaluing further. During U.S. rate hikes, the yen, won, and others collapsed. Even after rate hikes paused, rising gold prices pressure exchange rates. Trump's tariffs compound this, forcing export nations to devalue currencies to offset higher U.S. costs. preserving orders, but shrinking domestic asset values. Investors sell cheap to the U.S. What would you do? Imported goods get pricier. Living costs rise. Would you move assets to the U.S. or invest in gold, dollars, or bonds? Many businesses borrow in dollars. If you borrowed $1 million, converted it to 25 billion Vietnam dong, and the dong depreciates, that 25 billion might drop to $800,000. You'd still owe interest, fail to pay, and your collateral, stocks, real estate, becomes mine. Look at Thailand's 1997 crisis. $90 billion in dollar debt, a shorted baht, and depleted reserves led to collapse. Decades of wealth vanished as assets were scooped up cheaply by U.S. capital. If the Fed expands its balance sheet printing more money, global currencies will keep depreciating. In this currency war, gold could become the safest, most appreciating asset. The wealthy hoard it. Those without may lose everything subtly. Beyond physical gold, ETFs like GLD or IAU offer exposure. I buy physical gold with profits, storing it long-term, never selling. Gold is real money. For profit, I trade gold futures. Beginners can use ETFs priced in dollars, betting on local currency depreciation and dollar-gold gains. Timing matters. Gold's recent surge risks a correction. Buying at peaks can trap you. The Fed paused rate cuts. Stocks wobble without direction. What's next? How should we invest? Time's short, so I'll wrap here. I share free insights on wealth, business, and financial freedom. Follow my channel, hit the bell, and share this video. I wish you all success in achieving financial freedom. If you glean one or two life-changing tips, I'm content. I'm FortuneCraft. Goodbye, and see you next time.